let's look at a very interesting company in the home improvement space. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We will go here to the economic signals. Here is home improvement. Huge move here from the lows. 386% average. Massively outperforming the S&P 500. So these are the companies in the portfolio. We will look at Lowe's. They are basically there for you if you want to, to fix your house. Big move here from the low, basically at the 52-week highs. So here is the company's website. The first choice for home improvement. Together we deliver the right home improvement products with the best service and value across every channel and community we serve. And they have, a very interesting and nice video here in the background. So definitely a fancy website. If we go here to the charts. Okay, so this is the huge giga picture for Lowe's. It's up a lot. We've seen a very substantial move here from the low of the financial crisis. From that low, we do have 1,211-ish% gain, which is pretty darn decent. We do have some interesting cycle patterns. We do have there seems to be some kind of major cycles as well, but they are a bit messy. What I did find that have been relatively consistent, that's these time cycles, these smaller time cycles. You can see that when you look here at the candlesticks and the time cycles, there is a relatively good fit. So they have been rather tradable, which means that for quite some time now, Lowe's has been really good in a long-short portfolio. You can be long, you can be short. Judging by the time cycles, the current rising phase, it has now approached the middle of the time cycle. If you look at the previous time cycles, there have been times where it basically nailed the top in the middle, but sometimes the top has come a bit later. But there is a very strong tendency for Lowe's to eventually do have major pullbacks. One of the key pullback levels, within this time cycle range is this 50 and 100 week moving average. So you have the 50 week in green, 100 week in blue. To correct down to the 50 week moving average from the current price, that would actually be a bit of a substantial short. So to the 50 week, it's, minus 22-ish% because it is moving upwards. Down here to the 100 week is much more substantial. Then we are going above minus 30% pullback. Okay. So if you look here at, the very big picture, go way back in time. As far as, overbought alarm signals go, we do have a combination of factors. We have the very high RSI, and then we have the very high PPO. And the PPO measures the distance between price and the red 200-week moving average. So if you look back here, when we have that combination of alarm signals, we did have, a very weak period for Lowe's, where we went down to test the red 200-week moving average before we found support. That was a good short. In this scenario, we formed this top, and then we did pull back here to the green 50-week and found support there. In this instance, we do have that combination of factors, though the RSI was higher, but the PPO was at, a similar level to what we have now. In that instance, we didn't really find. Well, we did find initial support here at the blue 100-week moving average, but it was just a temporary rally. So this was a good example of how when we get very overbought, you can get into a messy period. But we did eventually, retest and find support at the 100-week moving average in blue. So basically, from a technical standpoint, this is a high-risk situation. That is basically my point. Previous times in history, looking decades into the past, this current setup is high risk for the bulls. Looking here at the daily data points, here we have the distance between price and the 200-day moving average in red. And in this instance, there have been times where we have been farther away, but this current setup, it is high risk also on the daily data points. Looking at the RSI, you see that it is very rare for us to become more overbought than we are now on the RSI. Almost every other time, we've had either, more modest pullbacks or even deep pullbacks. But basically, the RSI has been very good at calling the highs, and it is rare for lows to stay overbought. You see here that when you look here at the RSI, this is the relationship that Lowe's has with RSI. It pulls back quite quickly. Other stocks, they have more of this kind of relationship where you have the RSI channel like this, and then they can stay overbought for a very protracted period. But as you can see here below, Lowe's, it is very sensitive. That is rather relevant. But let's explore further. So here we have the seasonality of Lowe's. So we are currently in April. You can see here that May and June are, weaker. Especially June is literally the weakest month when you look at both the percentage of times it closes higher and also the percentage loss area, because the percentage loss is significantly deeper than what we have for January. So we are approaching a weak period for Lowe's. Looking here at Finviz, we are way above the trend channel, and it is all about buying low and selling high. And so when you are testing the low end of a trend channel, that's when it makes a lot of sense to become bullish. But when we are far above, that is when you need to flip the logic. Okay, so when we look here at analyst price targets, so the target price here is $201-ish. Based on the current price, the analysts, which tend to have a very long bullish bias, they suggest minus 3.6-ish downside. Saks.com, number 3 hold, B scores basically across the board. So Saks, they do have a number 3 hold, but the ratings are decent. Industry rank, top 39%, also more towards the somewhat bullish end of the spectrum. The dividend 1.15%, which is it's a dividend, but it's not big enough for it to really be a reason to hold on to the stock through stormy weathers. So basically, so to sum up my take here, as we saw with the home improvement portfolio, it's on average up a very, very substantial amount, like in a very huge way. When we look here at Lowe's, looking long term, the current signals we have going literally way back here to 2001. You can even go back here to 1999. So ever since that time, we have never had a higher PPO. When we look here at RSI, the current RSI reading on the weeklies is high risk. So there's too many factors here combined here with the seasonality that suggest that there is very likely going to be a significant pullback for Lowe's on the horizon. So looking long term at these levels, I would lean bearish. Looking here at the daily data points, here we do have especially the case with the RSI, where literally you can see here yourself, almost like every single time we have been at these levels, there's been a pullback to a key moving average. What we did find is that Lowe's, especially looking here at the weekly data points, it has been rather buyable at some key moving averages, like the 50-week moving average when we find support, and also the 100-week moving average. So after the pullback, those are some levels to consider if we do see some firm bounce.